SwissBorg is the official partner of my channel where you can buy, sell, hold, and more importantly stake your cryptocurrencies. You can even earn yield on your stablecoins. Sign up with my link and you'll earn up to $100 worth of their native token CHSB just for depositing €50 worth of crypto. SwissBorg. Hello everybody, welcome back. Let's have a look at the overall trading environment as it's Monday now, and things could be a bit of a big week, right, for us this week. So it's more or less the same analysis as it has been for a couple of weeks at least, basically. The Everything Bounce 2.0 probably ended now. We're looking for a bit of a rejection on S&P, Nasdaq, Dow Jones Industrial Average. We're also looking for a potential bounce on the Dixie. So we look at the last Everything Bounce that we got, Everything Bounce 2.0. It has yielded just short of an 18% move on the S&P. The Everything Bounce, the original Everything Bounce, gave us more or less the same. Now we did go on to make a new low on the Everything Bounce Part 1, which led into the Everything Bounce Part 2. Again, we played both of those. We had a good time doing that. This is where you can still pay the bills in a bear market. Trust me, it's definitely possible. It's not easy. It's not easy. It takes a little more deciphering than usual, but it can be done. As you can see, we did do that. But for the moment, you know, we treat it like a bear market rally. I'd love to see it break out of this descending triangle, and there is a chance that it will. I'll show you the Dixie in a moment, and there is evidence to suggest that it can happen. But for the moment, we'll stick to the same analysis that we applied when we got in at the bottom here, which is that this is just going to be a bear market rally that will take us up to the top of the descending triangle. Now, I've said a few times, and I feel stronger and stronger with this opinion that this could be the bottom of the bear market for traditional markets. We're talking, you know, major indices and whatnot. And I actually think that is the case now. I'm not willing to, you know, put my life on the line for it, but I think it is the case. Now, obviously, I sold this area, basically sold the top, obviously, bought the bottom, sold the top. That's what I do around here. But you know, there is a chance that we get legs and we continue. But even if we don't, there's going to be plenty of opportunity to get back in on something like this. And if we do get back in, we'll probably get back in outside of the triangle, which means that we don't have to deal with this descending trend line. We only need to deal with the horizontals, which are a lot better than trading within a triangle. Because the triangle, you get diminishing returns each time, despite, you know, both this Everything Bounce Part 1 and Part 2 yielding just short of 18% each, and stocks within it doing very well, obviously. So that is your simple explanation of why we should sit still and kind of watch the markets, especially this week, because we're already sort of dancing around with this major trend line. Now, Dixie, again, yeah, it's the same as I've said for ages. I told everybody that the Dixie had peaked. People were telling me, you're wrong, it's going to explode, it's going to 20,000, it's going to 1 million. I said, what, for the Dixie? Yeah, well, it's at least going to, you know, 120, man. Can't you see? And I'm like, no, all I see is a very, very likely potential of a rejection here, not based on its own chart, but crunching the numbers of the Japanese yen to dollar, pound and euro, merging them all together, spitting out some analysis, overlaying that kind of analysis to the Dixie chart, which was also pointing to a significant resistance that's based around a 12-year channel. And lo and behold, we got the top on the dollar there. And, you know, those people who were talking for breakouts have gone quiet. Oh, you were lucky, man. You were lucky. Well, lucky to have done my homework, I suppose, yeah. So what we were saying 7 weeks ago was that we will come down to the 50 exponential. That was the plan. So we've come down to there. It's also tied in very nicely to the top of this descending triangle. So it's time to, if you already haven't, I got out of my positions a couple of weeks back, but yeah, just think about the reality of what we're seeing here. Now, this is just the weekly. The weekly looks like that's what's going to happen. We're going to have a bounce here, maybe to the 10 exponential, so 107, maybe 108, 109 at best. And then a rejection from there, causing a lower high structure, so a downtrend. But if we look at the daily, it looks terrible. Daily looks awful. Below all major moving averages, rejection on the 200 and the 200 simple and the 10 exponential. Major resistance at 105.6, 105.7, major resistance, and already been rejected from it. If we go to the monthly as well, what do we see? Horrendous. We've broken down below the 10 exponential. This is a new month here. Look at that size of that monthly candle. For the people who are going, oh, it's 120 at least to go for a breakout, you're wrong. I don't know what you're talking about. I watch your channel every day and disagree with you, but I don't know why I keep watching. It must be because they're telling something that's mildly amusing or interesting, or I'm making money from copying your trades, but you're wrong. So yeah, that was a fine rejection for a month. It looks like again, a month can take a while, obviously, to play out. But I mean, as far as we can see here, the next major resistance, as far as exponentials or simples are concerned, is 101.7, and even below that, basically just short of 100. That's what the monthly's pointing to. Definitely is suggesting that. So despite the weekly meeting our expectations and targets, the daily and the monthly look like, terrible. They do look like terrible. This is cancelled hidden bullish divergence as well. So, if we really want to be looking at short-term timeframes, which is something I wouldn't really advise doing, a bit of regular bullish divergence on the Dixie now. So I honestly think that the chances of bounces are quite likely at this stage, but again, it's only going to bounce to a higher low. Same thing for Bitcoin, really. So we were talking about Bitcoin making incremental steps up by $100 or so. So we've moved up just this morning now, as we speak, really, to 17,424. The 200 simple moving average 17,500. This is 4 hourly, so these are going to drop with every 4 hourly candle closed. The next one closing in 13 minutes. So yeah, it's worked. Incremental steps up by $100, $500 each time. We do have, if we take all the noise off the chart, low, high, higher, low, higher, high, higher, low, higher, high. We've got a small but steady uptrend in play, which is fine. And I bet you the money flow index is looking quite peaky. Not massively peaky, so we could still move up further. 74, that's fine. But you can see the nature of these. They go straight up, straight down, straight up. Now, money flow index is quite good at navigating toppy kind of areas. Big top over here, and that only peaked at 91. Actually, that was quite high. Another peaky over here, that peaked at 88. It's just a 4 hourly. This one peaked over here at 88. We did run on for another one, but a significant pullback after that. So, I'm not suggesting the money flow index is a cheat sheet to finding tops, but it is quite useful on all time frames. Now, we've got a fresh cross over here above the 0 point for the MACD, but the RSI is quite high, and the money flow index is getting quite peaky. So I think that if we do move up further, we get a move into the 18,000 on, guess what, 18,500. Incremental steps up by $500 at a time to find the next higher high, and then maybe the next higher low will be shortly found after that. So consistent with the uptrend. Still got the Ichimoku clouds signal from before. We did get a negative cross followed by a positive cross, but the Chiku span just avoided the price action here. So this was part of the trend signal that was formed on this cross over here, still kind of technically in play by the skin of its teeth. So we could be looking at this to continue maybe throughout the next few days to see if and when the Dixie gets that final bounce. If the Dixie doesn't get a bounce, then this will continue, and maybe it'll gain legs, because we're only looking at a 4 hourly here. Take this to a 12 hourly. Is there any hope that we can find any bouncy trend signals? No, not a chance. We're not going to get anything significant until we reclaim 18,500. That's where we can get some serious signals on the 12 hourly, and the daily is going to be even more than that, really. We're going to have to, they're not going to get anything on the daily until we break above 20,500. So a long way away before we get any major signals on any of these other time frames, but that's no big deal. It's no big deal. We're still looking like an accumulation forming as well on Bitcoin. So again, with the traditional markets having their bottoms in, as far as I can see, there is evidence to suggest that this is potentially accumulation. Now, I've got to go and get the kids ready for school, but just to show you just very briefly, the last time we had a major capitulation dump in a bear market, we sort of zigzagged very slowly in this kind of slow, pathetic looking uptrend until we reclaimed the 10 exponential, and then finally the 20 simple moving average, a Bollinger Band center. That's where the bull market began. That's where I started to get very interested and went a little bit hard into crypto. Now, we could be looking at the same sort of thing taking place over here. So accumulation at these lower zones, maybe for a couple of months. And if that's the case, then we'll be looking for this to move up into the 10 exponential and the 20 simple moving average, your Bollinger Band center. And again, that's sitting around 19,600 at the moment, descending ever so slightly, bit by bit, with every week that goes by. So between now and maybe January, February, we'll be looking for this to sink down to the $18,000 zone. We've been sat in this sort of sideways area for quite a while, and then we reclaim these zones as we did in the last bear market, and then start to basically trend up in a new bull market. So serious stuff down the line, but for the moment we could treat it like an accumulation. Captain Hindsight could look back at this chart in February, March, April, and go, wow, the bottom was in, wasn't it, at 15,700? Why didn't we see that? Says, well, we kind of did see that, but we couldn't be certain. We can be certain that, well, a bit more certain about a bull market beginning as and when we reclaim these areas, but again, it's quite far away from right now. Anyway, long story short, sitting on the sidelines just as we did last week. Nothing wrong with that. There's plenty of reason to believe that we get a rejection on major indices. There's plenty of reason to believe that we do get a little bounce, even if it's on the short-term time frames for Dixie. And so there's plenty of reason to just sit on the sidelines and chill out. Anyway, I hope you have a nice day. Good luck trading. If you want to like the video, like it now, because YouTube love videos being liked at the end. It shows that you like the video properly rather than just a bot pressing like. And subscribe if you're not already. Thanks for watching, guys. Hope you have a nice day. Take it easy.